All right, we have more changes unfolding in the U.S. housing market. Changes that just set a new all-time national home price record, busting right through our June 22 peak. This is brand new data, by the way, just released by Black Knight and Zillow.com, who synced their monthly numbers to us yesterday. And the data is interesting. The price growth is interesting. Where it's coming from is interesting. We're going to look at it all together because it's not exactly what you'd expect. But before we get started, if you're not already a subscriber of this channel, consider subscribing. It helps the channel out, and I appreciate your support. So what the hell is happening with the U.S. housing market, folks? Where is this damn housing crash? Well, after the last 6 months of one of the slowest spring selling seasons on record, the last month, the month of July, turns out to be a bit of a banger. We're going to look at that in a minute, but first it's important to point out what's happening here. We are right now back in the midst of the largest housing bubble in the history of the U.S. residential real estate market, folks. Never before, according to Black Knight at least, have things been so bad, prices so out of reach for the ordinary home buyer. Breaking through the June 22 peak marks like the zeitgeist of this period. We are right back where we were, and before we look at what they say, let's look back in history before the last housing crash. Have we seen something like this before? Well, take a look. What do you notice during the run-up before the meltdown in 08? We had something very, very similar. Let me zoom in here. This right here at the top of the housing bubble, prices began to correct. It appeared they began to correct at least, and then boom, they shot back up before crashing back down. Now, is that what's happening right now? There's no way to know for sure. I think it's very likely we're going to see a real correction take place, and I'll show you why I believe that is coming in a minute, why I believe it's inevitable, to be honest. And one more thing to point out about this, we've gotten bombarded with new data in the last few days. I'm still working through everything that was sent over to us, but one thing I spoke about on Twitter this morning, or yesterday morning, was the resurgence in the rental market. Rent, folks. Where is this crash in rents we've been hearing about? I was always suspicious about that, by the way, as the data I was seeing from Zillow was showing the complete opposite. But again, Zillow is just one single data source, so I didn't push the topic. But check this out. The apartment list rent index has turned positive again, almost entirely wiping out the dip we saw in the rental market, all right? Which also puts the annual pace of change positive again in just a couple more months. And now even Redfin is showing rents surging as well, with the typical U.S. asking rent just shy of a record high in July. Look at that. The entire rental crash people have been talking about appears to have all but puttered out. Now, this doesn't mean that we won't see downward movement in the shelter CPI numbers, because we will. Shelter makes up the largest cohort of CPI, and it lags by almost a year. And people have been saying it's going to roll over for months now. Actually, I've been hearing that since last year, and it will eventually. But at this rate, the pace of annual change will end up reverting positive in just a couple months thereafter. So yeah, July's been filled with surprises, folks. All of it just getting dumped out in the past few days. And if you thought that was bad, wait until you see these home price numbers. But before we look at that, with all of the rampant inflation that we're all dealing with right now, higher prices across the board for fuel, shelter, food, we need to save our dollars where we can. And that's why the partner for today's video, Mint Mobile, now you may think this sounds off topic, but wait till you hear this. So I've used one of the big cell phone providers for 15 years now. Their prices have continued going up. My most recent bill was around $250 per month for 2 phone lines, $250. Completely ridiculous. Well, Mint Mobile offers premium wireless for as low as $15 per month. And you don't have to sacrifice any coverage, speed, or data. They're built into the nation's largest 5G network. They keep costs low because they sell direct to you online. They've eliminated the retail stores and salespeople. That's how they're able to do this. So really, why pay more? Why pay those ridiculous traditional phone carriers for the same access to the same network, but at price points multiples higher? Makes no sense whatsoever. All of their plans include unlimited nationwide talk and text, plus lightning fast 5G and free mobile hotspot. They also have family plan options as well. And what's awesome is if you sign up today, they'll give you a 50% discount on the unlimited data plan if you use the link I put in the description of the video. The link, by the way, is trymintmobile.com/RJTalks. Once again, that's trymintmobile.com/RJTalks, or check the description below. All right, so we just looked at rents, right? Surging higher again. Now let me show you what the hell just happened with home prices. So we just got data dumped in the last few days. So much new information just synced into Snapforce. Zillow releasing their July numbers yesterday at 12:01 a.m. Sync them into our database. And secondly, we have Black Knight, who also published their August report for July's housing numbers as well. And I think that's where we need to start. Let's just jump right into Black Knight first, because that's where the headline is coming from. Zillow tracks like right along with it, but Zillow didn't break any new ground. It's Black Knight's home price index that plowed through to set a new peak in home prices. So check this out. What we're looking at is Black Knight's August report, just released, showing July's data. Now remember, July is technically the last month of what's considered the spring selling season, which for anyone not in the know is prime time for home sales. It's the time of year when realtors sell the most homes. It's also when inventory seems to dip and home prices increase. It's a seasonality thing. Every year, basically forever, that's how the market moves. Spring's up, rest of the year levels back out. Now let's just jump right into the meat and potatoes of this report, the headline grabber, right? This is the Black Knight Home Price Index, similar to the S&P Case-Shiller Index or the Freddie Mac House Price Index. They're all different, obviously, but it's the same idea, trying to give us a sense of where home prices are, where they're moving. And according to Black Knight, they are moving back up, folks. Take a look at what they say. Home prices grew by a seasonally adjusted 0.67% in the month, slightly cooler than the 0.8% seen in May. Recent monthly gains suggest that further acceleration of annual home price growth rates are likely on the horizon. A continuation of gains seen over the past 6 months, this would result in the annual home price growth rate accelerating to 2% or higher in July, with further acceleration in subsequent months. Now that last point makes sense, right? We're currently in a higher, stickier inflationary period. Inflation's still well over 2%. So expecting home prices in the short term to follow that is expected. That's what's happening. It's been happening for the last 6 months on a national level. But what I don't agree with is further acceleration of home prices. Prices always cool off during the fall. And before we keep going here, I just want to make a clear distinction. Are we seeing a housing crash right now? Clearly and obviously not. Have we seen one for the last 6 months? Clearly not. Will we see a real correction at some point in the future? Yes, I believe we will, with the last 14 months of consecutive price declines prior to June, that is, now all being washed away. We are literally right back at the top of the home price bubble, just where we were at the end of June of last year, just like what happened during the run-up to the '08 meltdown that we looked at earlier. The housing market, folks, moves like a turtle. Housing corrections take years to play out. You could see it on this chart. Look at how long it takes between the last 3 real home price crashes that we've seen. It's going to happen, all right? It always does. At some point, this craziness will correct. We are at virtually the most unaffordable housing market in the history of residential real estate right now. You can see Black Knight's payment to income ratio. The only reason we're not above where we were last year here is because mortgage rates are still slightly below their 2022 highs, but that's changing soon. Rates are going higher. They are going to continue to go higher, at least in the short to midterm. And we could see the most unaffordable markets right here: Nashville, Sacramento, Riverside, Seattle, Miami. Let's look at some of these actually. Let's look at Nashville. So I'll jump into Snapforce. This map's using Zillow's most up-to-date home price index data set. So actual home values here for July 2023. It's what they just released yesterday. So take a look at Nashville. As of today, home prices in Nashville are only down half a point from June of last year. That's it, just half a point. Typical Nashville house is valued at $428 grand, still off their highs of last year, but just slightly, and still 53% over July 2019, 73% over July 2017, and 150% over July 2014 prices. How about from the last peak of the market back in '06? Whoa, 160% over July 2006 prices. All right, I still need to work through all this new data. I just wanted to get this video out to you. If you enjoyed it, got something out of it, press the like button. If you didn't, that's all right too. Press the dislike button. Either way, I appreciate you watching.